Ichimoku Cloud. If you're a trader, definitely you heard the name of this popular indicator. But when you add it to your chart, it may seem a little confusing because you see many lines cluttering your chart. But today I want to introduce a new version of Ichimoku Cloud, which is in the form of an oscillator placing below the chart and giving perfect entry and exit signals. If you're interested to know more about this indicator, stay tuned and let's get started. Alright, to add this new Ichimoku Cloud indicator to our chart, here we click on indicators and we search Ichimoku oscillator. This one, which is an editor specs indicator and written by someone named Lonesome the Blue. We also add the original version, this one, because before we can understand this new version, we need to know the different components here in Ichimoku Cloud indicator, so it will make sense for you how this oscillator gives these buy-sell signals. Each of these lines and shapes have a Japanese name, but in this video we use the translated English words. This blue line that you see here, which is the fastest line among others and moving very closely to the price action, is called conversion line. The formula for calculation of the conversion line is 9 period high plus 9 period low divided by 2. The red line is called baseline, and in compared to the blue line, it is moving slower and stays farther away from the price action. It is calculated similar to the conversion line, but for 26 periods, 26 period high plus 26 period low divided by 2. The behavior of these two lines is similar to moving averages, and you can interpret them in that sense. Alright, these red and green areas are called cloud, and they are formed by the help of these green and red lines. The green line is called leading span A, and it's calculated based on conversion line plus baseline divided by 2. And the red line is called leading span B, and is calculated based on this formula, 52 period high plus 52 period low divided by 2. These two lines also act like moving averages, and as you can see, the red line, which is calculated based on 52 periods, it's smoother and stays farther in compared to the green line, and their crossovers show direction of the market. When the green line crosses above the red line, the cloud becomes green, and when the green line crosses below the red line, the cloud becomes red. This cloud is used for identifying the overall trend, evaluating momentum, and also possible support and resistance zones that may hold in the future. And as you can see, the cloud is the leading component of this indicator, which is extended into the future. And in this case, it can act as a resistance level. We have another line here, this green line, that sometimes is moving very closely to the price action and sometimes far from the price action. This line is called lagging span, and it's actually closing prices that are plotted 26 days in the past. Alright, these are the components of Ichimoku Cloud indicator, and I don't get into more details regarding the interpretation of these lines and how they are used for trading, because the focus of this video is this newer version of Ichimoku Cloud indicator. In case if you're interested to know more about this original version of Ichimoku Cloud indicator, I have a guide on this. The link is also placed in the description and you can check it later. Without wasting any more time, let's see what we have in this new Ichimoku Cloud indicator. Alright, as you can see, we have a histogram here, and the histogram is moving above and below the center line, which is 0. But if you pay attention, you can see that we have 4 layers on the histogram. The first layer is the distance between the closing price and the cloud. The second layer is the distance between lagging span and the cloud. The third layer is the distance between conversion line and baseline. And the fourth layer is the distance between leading span A and leading span B. When all of these layers are visible, this is good in terms of momentum strength. We have also this white line, which is an exponential moving average with length of 9, and in this indicator it's used for profit targets, which I explain later. And also by default here in the settings of the indicator, ATR is used for conversion line and baseline, which helps in choppy markets so you can stay on the trend for a longer period of time. Alright, let's close this Ichimoku Cloud from our chart and let's see how we interpret interpret this oscillator. Just similar to other oscillators, having the histogram generally below the center line shows that the market is trending down, and in this situation the histogram color is red and the background blue in this indicator, and having the histogram above the center line shows the market is trending up, and in this situation the histogram is green and with background in a darker green color. So in a general look, when you see that the background is blue, the price is declining, and when the background is green, the price is advancing. When the background changes from green to blue, that's actually the ending point of the previous advancing of the price, and this indicator also shows this multiply sign indicating that the previous trend is probably ending, and when it shows yellow triangle, it's a sell signal. In other words, it's a signal for opening a short position. And when again it shows multiply sign, which is the color changing point of the background as I mentioned, it tells us that this downtrend probably ended and probably an uptrend will start. So for this short position signal here that we opened a position in practice, for example here, we close our short position here when we get this multiply sign. This is a long-term target, and the indicator also provides shorter-term target by the help of these small multiplier signs. When conversion and baseline cross, we have these small yellow signs which you can partially take your profit, and by default here in the settings of the indicator, take partial profit by EMA as on, which are these white signs, and it happens when we have EMA cross. This white line is EMA with length of 9, as I mentioned earlier. If you see too much of these white signs and you find them distracting, you can turn it off here by the help of this option. So you will not have these small signs based on EMA cross, and you will only have these yellow signs which are when conversion and baseline cross. And on the other hand, when the background changes to green, which is when the histogram goes above 0, and we get also this multiply sign, and after that when we get a white triangle, it's a buy signal. In other words, it's a signal for opening a long position, and when we get a multiply sign, we should close our long position. And similarly, we have these small signs for taking profit partially. In times that the histogram is gray like here, here, and here, it tells us that probably the price is in a support or resistance zone. So there is a possibility for falling of the price or bouncing of the price from these probable support or resistance zones. Alright, until now you learned how to interpret this indicator, and let's see how we can effectively trade based on this indicator. Alright, as I explained, when we have a yellow triangle after having the histogram going below 0 or the color changing of the background, this yellow triangle is a sell signal. And similarly, the white triangle that forms after the histogram goes above 0, it's a buy signal. In a perfect situation, you will have a sell signal like this, where you open a long position here at this point, and then you close your position here when you get the multiply sign and you make a huge profit. But this is not always the case, and you can have a buy signal like this one and open a position here, and then you get an exit signal here and you close your position here, and the trade is nothing, just paying trading fees or ending up in loss depending on where you get the exit signal, which can make your loss in different sizes. The reason for this is that the market is in a trading range and moving flat here, as you can see. Let me scroll back to show you another example here. Here also the market is in a trading range, as you can see, and you will have the similar situation. Here we have a buy signal, so opening a long position at this point, and we get the exit signal here, so closing our position at this point. Another long position here, we would enter a long position at this point, exit signal here, so we close our position here. Or for this short position signal, we enter a position at this point and then we close it here. Or again, this buy signal here and closing it at this point. Whenever the market is in a trading range and moving flat, we have this situation. So we need to know when the market is not trending, so we stop taking these positions and we only enter a position when the market is establishing a new trend. The most effective way is price action analysis, but there are also some indicators that can help us for this purpose. One excellent indicator is Ichimoku Cloud. This one, which is written by D7R. This is a very powerful indicator that can help you with identifying trending and non-trending markets. In times that the price is inside the cloud or the cloud is in two colors, the market is not trending. And in times that the price is above or below the cloud and the cloud is in one color, the market is trending. When the price is below the cloud should be red, and when the price is above the cloud should be green. So when the price is inside the cloud or the cloud is in two colors, the market is not trending. Let's see how these two indicators perform in conjunction with each other. For this buy signal here, the price is inside the cloud and the cloud is in two colors, so we don't take any long position here. For this buy signal here, the price is inside the cloud, so this signal is also rejected. For the sell signal here, the price is below the cloud, but the cloud is not red yet when this candle is closed, so this sell signal here is also rejected. Here for this buy signal, the candle is apparently closed above the cloud, but the cloud is red, so this buy signal here is also rejected. For this sell signal here, the price is below the cloud, but the cloud is in two colors, as you can see. So this sell signal here is rejected, but for this sell signal here, the price is below the cloud and the cloud is red. We don't have any green cloud like here in this part. So this sell signal here is confirmed, and we can enter a short position at this point when this new candle is opened. The stop loss above the previous swing high, and we close this position when we get a multiply sign, which happened here. So this is where we close our position, and as you can see, this is a very profitable trade where the price declined down to this point. Alright, moving on the chart, here we have a buy signal. The price is above the cloud, but the cloud is red, so this buy signal here is rejected. And for the sell signal, this is also rejected because the cloud is green and the price is inside the cloud. As you can see, this setup can effectively help you to filter the false signals during flat market and only take the signals that are in the trending phase of the market. Although this strategy has a very high degree of accuracy, but it doesn't mean you will not encounter false signals. No trading strategy is capable of this, and you need to manage your risk properly so you can limit your losing positions. I recommend using 1% roll risk management strategy, which is one of the best risk management strategy that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.